किया मैंने। हालात बदले, लोग बदले, अगर कुछ नहीं बदला तो बाबूजी की सिखाई हुई एक बात, वो कहते थे जब नींव मजबूत हो तो फिर चाहे वक्त के उतार चढ़ाव कैसे भी हो, हम उनका डट कर सामना करने में सक्षम होंगे, बिल्कुल इस पेड़ की तरह। ऐसा ही एक अटूट रिश्ता जोड़ता है आपके साथ IDFC फर्स्ट बैंक। विश्वास, पारदर्शिता और सच्चाई का, क्योंकि इनको आपकी सफलता में अपनी जीत दिखती। मैं तो जुड़ चुका हूं इनके साथ, आप भी जुड़ जाइए ना। IDFC फर्स्ट बैंक, always you first.
Welcome, ladies and gentlemen, to Leading Edge 2021. Today's topic for discussion is Reimagining Financial Services the Digital Way. And I have with me NITHIN, KAMATH, co-founder Zerodha, e-broking platform, YASHISH, DAHIYA, co-founder Policy Bazaar, which is a marketplace for all kinds of financial products, and GAURAV, HINDUJA, co-founder Capital Float, a fintech platform that makes small ticket unsecured loans possible. Thank you so much, gentlemen, for joining me on this discussion today. I was thinking about all three of you and your businesses last night, and just to put together questions for this panel, which I had a sketchy idea about how this conversation should go. And I was just thinking, what do you guys represent to me? And the first thing that comes to my mind when I think about NITHIN, KAMATH, and Zerodha is he's the Rajnikant of cinema. And why do I say Rajnikant of cinema? Is a superstar, so with 90% to 100% popularity in Tamil Nadu. And of course, very loved elsewhere also. And I said, you know, what do I call YASHISH then? Because he's also superstar of insurance business. And he's also the Rajnikant of insurance business. And I thought that, okay, I can't have two people being Rajnikant. So let me think of a different analogy for YASHISH. And I came up with Ayushmann Khurrana, which is like, he's like a star of everything he does, right? And very unconventional roles, and trying to get into a bigger space and mass appeal. The runway is huge, he's young. So that's what you represent to me, YASHISH. And I thought about GAURAV, and I just couldn't think of anybody befitting at this stage for GAURAV except Nawazuddin Siddiqui in his younger days. So into alternate cinema, very powerful, but it's a period of struggle you have to go through to really get to that position where you have established yourself. And that's what the business sort of conveys to me. This lending business is not easy. The ground that you've chosen is difficult, but huge potential. And if you make it, you are a star. So the younger Nawazuddin and the Rajnikant and the Ayushmann Khurrana, please tell me, am I correct in my description?
I'm just happy you didn't call me the Gulshan Grover or something. Yeah. No, I'm just kidding.
Thinking of Gulshan Grover.
Lending is a tough business, yeah, and then you have to collect money back from people during a pandemic. So I'm sure not the most loved person when it comes to being a lender.
Yeah, no, I think Rajnikant of Andaman and Nicobar maybe, because we just have like 15 million people investing in the stock markets. So that's like a really, really tiny piece of India's population. So yeah, so I mean.
But in this space,
Mahalakshmi, you've certainly made my day, because I'm touching 50 and you've just called me Ayushmann Khurrana, so and young. So thank you for that.
That's perfectly fine. Age has nothing to do with this. The first thing I want to really talk about is how this fintech, all of you guys, I think YASHISH did his startup and started your Policy Bazaar in 2008. NITHIN, KAMATH did it in 2010. Capital Float started in 2013, I guess. And we've come quite a long way from there. And the fintech space itself seems to be exploding with huge number of startups coming up. At last count, I saw some 2,174 fintech startups, with wealth tech having about 486 startups. Insurance has some 100 odd startups. Digital payments itself is 400 startups, and lending is another 300 and 350 startups. So what do you make of this sort of thing? I mean, I find this irrational exuberance of some sort, where profitable models, there is a lot of promise, but are there really profitable models to be created? I ask you, especially NITHIN, KAMATH, and YASHISH, because NITHIN, you have already hit that golden mark, and YASHISH, you are also almost there or already there. So may I start with you?
Yes, the thing is, when we started in 2010, I don't think we ever thought of ourselves to be fintech. I mean, these are all accidental things that changed during the journey, because when we started the business, I was an active trader, and we were trying to build a broking business for very active traders like us using vendor platforms. There was no tech at all in the business. Fintech happened when Kailash, who heads our tech, joined us in 2013. The journey of tech actually started, from then. The thing is, I think India is underpenetrated in terms of, when it comes to financialization. So, like I said earlier, there are 15 million Indians who probably invest in the market once a year, and there are probably another 20-30 million Indians who can potentially invest, right? As in, I don't think you can really look at the entire 140 crore Indians and say, you know what, they can all invest, because 70-80% of the country is kind of around the poverty line. So I mean, they'll never really have the money to invest, right? So so we look at our market size to be maybe between 6 crores, around 6 crores, right? And so there is an opportunity to still grow, the market's 3x. So it's just but natural that there are more players who are coming in thinking of this in the same lines, as in saying there is this opportunity to grow the markets. And I'll tell you, the biggest tipping point for us in this journey was actually this Aadhaar, Aadhaar for onboarding. Because what was happening was, until Aadhaar came, an account opening was a 40-page document, and there was so much to and fro that used to happen just to open an account, right? Which meant that traditional businesses which had a physical presence were the ones who could kind of go to any business, right? As in, so for example, the more number of branches a broker had, the more accounts he had. It was almost like a direct proportional to the physical presence. Building the physical presence is not that easy, right? As in, that I don't know if I don't think personally I have the skill set to go and build branches and relationship managers and all of that, right? So yeah, so while there is exuberance right now, I mean, there are a lot of people looking at this opportunity, but I think there is an opportunity. It's not that there's no opportunity in the market, but so there is an opportunity to grow the markets.
No, of course there is opportunity. So when but I'll ask the follow-up question to that. But Yashish, what do you think? Would you call this irrational exuberance, or?
So see, whichever way you look at financial services, these are very, very large industries. Whether you look at insurance, lending, or investing, all three of them are very large industries globally and in India. And of course, there's a massive opportunity. If you look at the most valuable companies on the stock markets, they tend to be financial services companies. So clearly there is a way, and they have largely operated for the last 20-30 years in a particular way. So there is clearly an opportunity to do things somewhat differently and thus create huge value. Now, at the same time, while these are very large industries, they are also very intricate. And I use the word intricate very specifically because I think, and I may be wrong, but for every NITHIN, KAMATH, and Zerodha that has happened, there have probably been hundreds of attempts to do pretty much the same thing. Pretty much the same thing, not very different.
Right.
But there was something, a very, very specific thing that NITHIN, KAMATH, and Zerodha got right, or Policy Bazaar and YASHISH DAHIYA got right, or somebody else is going to get right. And that little difference, micro difference,
right,
is the big differentiator in the financial services market. And that will happen because it is a very large market space, and that one little thing can tilt the balance. Now, we don't know what it is going to be. And that is why, see, one can call it irrational exuberance in a way, but you think about it, right? Somebody like an early investor in with Zerodha or Policy Bazaar invested a small amount, and that time it seemed exuberant. but today they've probably made 100 times those investments, right? So I think everybody will not succeed. Very few will, but still it is worth it. If you really think about how much capital has gone into all the startups compared to the size of the market,
Right.
it is a fraction. So yes, I think we will have to try 100 things and then one will work. We don't know which one will work right now. And we don't know who is going to be the next Nithin or Yashish or, GAURAV, but some people will.
Sure. Gaurav, looking at your own space, what do you think?
Yeah, I mean, it's clear, right? The opportunity is massive. The banks are really going after only the top 50 million Indians for credit. There are at least, 300-400 million between the microfinance and, let's say, the banks, right? So this whole missing middle has always been around for 6-7 years, and even longer. And even though digital lending has really kind of come into force over the last 7-8 years, I think all of us digital lenders, you said 300 odd companies put together, are barely a dot in compared to the size of let's say a good private bank, right? In terms of the number of loans we originate. So we are still scratching the surface. There is a lot more to do, and I think where you'll see it coming from is folks who are typically not into fintech, but figure out that fintech is a good way for customer retention, a good way for monetization. And I think that's where you'll start to see a top dollar coming in over the next couple of years.
Sure. So, so here is my question. There is this, there is this general thesis that is a huge market opportunity, which, for example, Gaurav's space, the lending space, there is a missing middle or something that the traditional banks or financial services company have not addressed, and therefore there is an opportunity for you to do something. And there is the policy bazaar or a Zerodha kind of model where traditional guys existed, but there was it called for you could create a digital model by just disrupting the physical force. It's like taking away share from the mainstream or the traditional industry. Now, how much runway do we have? And if the missing middle is really missing, is that not for a good reason?
So one thing I just wanted to correct there a little bit. I don't think either Policy Bazaar or Zerodha is only taking market share away. It is also creating a market. There are a lot of people who I know who have never traded in stock markets, including myself. I was 2 days ago or 3 days ago, I went to Zerodha to try and register for the first time. It's giving me an inspiration to try and do a bit of trading, right? Similarly, on Policy Bazaar, you show me the customer who had a term insurance policy before 2009. I promise you, you will struggle to find one person, right? So actually, it's market creation. And it's just 10 years ago. 10 years ago, people never bought term insurance. Today, term insurance is the most researched product in the country. So I think we are creating value, not just taking value. And I think that's a very important point, because otherwise the existing market sees the new players as disruptors. But we are not disruptors alone. We're also market creators, because the market will grow much more when you find an easier way of doing things. Sorry, I just wanted to mention that.
So I accept that, Yashish, especially in insurance, I totally understand, because term has been the most underpenetrated and undersold, because obviously the commissions were low and companies were not interested. Even today, they're not interested in pushing it probably. And I give it to you, but I'm not so sure about Zerodha. Zerodha is a very pandemic outcome, or this whole idea of Robin Hood trader. I mean, no jobs grow, nothing to do, but
I am an example. I am an example. I never used to trade before. I have just gone and,
but you have a job to do. But I'm talking about, lakhs of other, I'm not sure lakhs or thousands, I don't know what those numbers may be, but I heard you say that your user base has gone up 3 times, Nithin, in one of the interviews. Yeah. So that must be a pretty large number. Pandemic trading can't be called market expansion, or would you?
Okay, so no, firstly, see, 70% of people who open accounts with us are first timers, right? So they've never invested in the markets. Now, calling millennials as Robinhood traders, I think, is almost derogatory, because because the way this term is getting referred is that these people are doing stuff without doing any research. I'll tell you, all the younger folks I know do a lot more research than all the older folks I know, right? As in, because I think, we're kind of born into this Google generation. So like if my dad, he gets a stock tip, he'll go do this trade, right? As in, but if I were to go tell this to my younger cousin, he will go research before doing anything, right? So that's the culture. I mean, that's, the reason we show up for people who want to open accounts today is because they're doing research. They're not getting missold to someone, right? I mean, like 10 years back, I remember my mom got missold, like a, investment product, right? And, but I can't think how, in today's generation, people won't get missold, right? And that's one of the reasons why the incumbents are losing, as in the sense, you have to have a better product today to be able to take on them, right? No, the business has grown 2x. We were at 2 million customers in Jan. We are at around 4 million customers. I think, I don't think it's just the pandemic, which has triggered, like a lot of first timers to the market. What has triggered this is, firstly, interest rates are at all-time lows. So if you keep money in your bank, you're losing money, if you adjust for inflation. So people are looking at outside opportunities. What pandemic did was, I think people's savings went up, right? People spent lesser. So which meant, which again, saw the markets, because the markets were performing well as well, right? So, and the thing here is that most people who are calm in the last 1 year, they're not doing active day trading, or they're not doing futures and options trading. They're investing money in the markets, right? And I think, like, if you were to ask me, Nithin, what's your true north? I mean, I think we need people in this country to be backing their entrepreneurs. I mean, we need people to be taking more risk than putting their money in the bank or gold or real estate, right? As in, because, when money goes and, gets blocked there, you're not really helping the economy grow. As in, you need people of this country to be appreciating risk. Are Indians, a lot of Indians ready for the volatility of stock markets? Maybe no, right? As in, that's, one of the things that we've been thinking is probably a better stepping stone is probably debt instruments, kind of low risk than stocks, higher returns than bank fixed deposits, before you actually expose them to stocks, right? But that market is not developed today, as in we are working, towards it. But yeah, would the markets have expanded if you were not there? Maybe not, right? But the reason it's expanded in pandemic is not just because people don't have jobs. It's because I think the triggers are because there's more savings. There is interest rates in the economy is low, and of course, greed is a big enabler. So markets are doing well, so which means people will get attracted to wherever the returns are more.
Sure. GAURAV, what's your take? I mean, the missing middle is it missing for the right reason? Obviously, I'm asking the wrong question, because otherwise you wouldn't have started Capital Float. So in a way, it's not. But I just want to understand, what is the proposition that you have that, for example, today a Bajaj Finance doesn't have?
Sure. No, I think that's a great question, right? I would say that there are two buckets in which I think we feel we compete well with folks like Bajaj or anyone else, right? One is in terms of the experience, right? Now, yes, a Bajaj or a good NBFC has come a long way compared to a public sector or private sector bank. But I think there is a version 2.0, version 3.0 when it comes to the experience of taking a loan. And I'll give you an example. Today, we have a product called Buy Now Pay Later that allows customers on online e-commerce platforms to check out and take a loan at the time of checking out, right? The whole underwriting process, the approval process takes about 30 to 40 seconds. And there's reams of data that's actually crunched in real time and given a loan. Now, Bajaj was great at doing that in the offline world. And I'm sure they will kind of get to the online world. But I think folks like us probably start in the online world and figure out how to really, in some ways, take inspiration from them and actually build what they've been able to build in the offline world, but create a far more seamless experience while doing it. The second thing is, how do you really provide access to people who don't really have it, right? And this is where I think you'll see a real potential from a lot of the startup fintech lenders coming up in the next few years. Is there is still today, I would say, at least 200 to 300 million people who today don't have a bureau score or are called new to credit, right? And that's where data and that's where our pipes in terms of how do you understand data like SMS, how do you lend to a decent level in terms of alternate data, etc., I think that becomes an interesting pie. We're able to really acquire these customers and kind of grow with them over time. Now, obviously, where a lot of the Bajaj's and the banks score over us is the cost of capital and size of the balance sheets, right? And so this is a bit of a never-ending race as to who's going to come first in terms of great customer acquisition versus where the cost of capital obviously ends up reaching up for a bunch of fintechs, right? So I think it's not to say that I think we take inspiration from all the names that you just mentioned, but I think the size of the market is so large that if you're able to provide a good experience, I think there is room for a few kind of big players to be developed over the next decade.
Yashish, tell me, I heard your interviews, in one of your interviews, you said that in Policy Bazaar, you guys started with no salaries. So even in the first 6 months, you didn't really make an operating loss. So it was like a profitable model all through. But that was not quite the case in Paisa Bazaar. So what was exactly the difference, and how is the landscape in lending really different from your earlier model?
No, I don't think the landscape is any different. See, Policy Bazaar and Paisa Bazaar are both so Policy Bazaar started about 13 years ago. Paisa Bazaar started about 7-8 years ago. And it was unfair to expect, because by the time Paisa Bazaar started, Policy Bazaar was already a funded, decently valued business which had a lot of capital. So anybody who joined in Paisa Bazaar joined at a market salary. It wasn't like, obviously in Policy Bazaar, people did not have a salary for some time. And not just, I'm not talking about just me, I'm talking about everybody in Policy Bazaar didn't have a salary. We were not paying salaries at all. All the people who joined, the first 20 employees did not get a salary for the first 6-7 months. And then even when they started, they would be very minimalistic, survivalistic salaries. Yeah, what do you need to survive kind of thing. Now, by the time Paisa Bazaar started, it wasn't the case, of course, right? Of course, everybody joined at pretty much market salaries.
Right.
So clearly, every business is built differently, right? But we could see these two within ourselves. And let's say a Policy Bazaar was built always at about 0.5x of revenues. So the measure we took was our lifetime burn was always less than 0.5 of that year's commission. Whereas for a Paisa Bazaar, it might have been 2x. And, then you look at businesses like NITHIN's, which have been far more, efficient, capital efficient. And then you have an Info Edge, whose lifetime raise was basically $2 million. And they, in that they have built almost a $8-10 billion company now. So I think everybody is different. Every situation is different. But yes, ours was about a 0.5x of revenue is what Policy Bazaar spent while building Policy Bazaar till date. And Paisa Bazaar was probably at about 2x. So yes, it was obviously not as efficient as Policy, but that's fine.
Sure. And if you were to talk about, where do you see, NITHIN, profitable models emerging in the fintech space? What space would you identify?
No, see, the thing is, I think I can talk about investment space. I mean, investing, that's where all my life spent. I think there's an opportunity to build great advisory business. Like you pointed out earlier, I think what this country also needs is a great advisory ecosystem. Because today people come and do, their own research and decide what to buy or sell. Right. The reason for that is because there isn't an advisory ecosystem that kind of, helps people, like in the US, for example, most investments come through advisors versus, direct. And India, the challenge has been, while SEBI has put all this framework of RIAs, they haven't solved for the problem of collection of RIA fees. In the US, the advisor gets the fees out of the assets. In India, the advisor has to go collect fees separately, right? And that is, impossible, right? As in, like, try going to a customer and asking for a fees every month for advisory, right? So I think if someone were able to solve the problem of collection of fees, I think that whole advisory piece in India is potentially a really, really large market in terms of revenue. Outside that, I think there is space for asset management companies. It's almost like quasi advisory of sorts, because until now,
You
mutual
mean
funds.
through a digital delivery model?
Absolutely, yeah. Digital delivery, keep costs low, be passive. I mean, I like if you look at the top mutual funds and the large cap funds, they've all
You
been.
mean just a digital vanguard kind of thing?
Absolutely. I think there's space for that in India. As in, there is space for that today. It wasn't there before, because today there is space for it because there are platforms like us, right? I mean, there are platforms like us, Paytm, Grow. I mean, all of these Upstocks, etc. Right? I mean, they're all selling direct funds. They're all gonna showcase what is better for the customer. Because earlier, what used to happen was platforms would sell what earns more, right? And now with this whole influx of direct mutual funds, funds which are going to perform more is going to get sold more, right? So there is that distribution is kind of covered for passive funds today. So I think there's an opportunity to build passive funds which are easier for people to relate to, because today, if you start deciding what mutual fund to buy, you start off saying hybrid funds, whatever balanced funds, as in you just lose the customer out.
As complex as stocks.
Correct, absolutely, right. So I think both these are opportunities waiting kind of to be tapped types.
That's the whole thing. So all of these things are so evident, and yet those problems don't get solved because the traditional industries have such a huge vested interest in keeping that framework going. But for these new funds, mutual funds will not be able to raise the kind of money that they would because of new offerings. The same thing with insurance, Yashish, like, the products that you have brought, like you say, that which has created market expansion. Do you see this making a dent in how the insurance space itself gets redefined? Because the real insurance products are not getting sold through the traditional industry. It's a platform. It took a policy bazaar to really up the protection levels in this country. So
you're right, Mahalakshmi. It takes a lot of effort.
And when you are small, I'm sure the manufacturers are more okay to be creating products that you can sell more. But when you are of a certain size, and they know that it can be detrimental to their income profile, the stance may be very different.
So, Mahalakshmi, I'll share my thought process over the last 3-4 years. I think now, earlier I agree, the manufacturers could not create a product where there was a good distribution platform which was efficient and which could get them the right customers, etc. But now, at least with us being there, that platform exists. So I don't think that is a challenge anymore for a manufacturer to at least create a product, right? But what we saw was there is still a lot of customer apathy towards insurance products. And I'll give you some examples. See, we brought out these really low-cost ULIP products, which at many a times were more efficient than mutual funds, more efficient than even direct mutual funds, which is crazy, right?
I won't accept that.
You don't accept it, but we can have at least a debate on it, right? What I'm saying is there are times when we can at least have a debate on it. Really, really low-cost ones where the total fund management cost was below 1%. Right. So even direct mutual funds are having a 1.25, 1.35, and the biggest cost is actually the fund management cost, right? So I think there was some. Now the point I'm making is the customers did not bite at all. At the same time, if you are selling a really, and I will not go on to say more, but let's say a normal traditional product, the conversion rates are exactly the same, or in fact even better. Right. So on a product where our lifetime revenue would be 3%, which no other distributor in the country is willing to sell, on that product, we're getting the same or lower conversion than on a product which gives 30-40% commission.
Right.
For us alone. Now, that starts to challenge, and that is what leads to markets not changing fast. Now, which is what I was saying, fintech is a big market. But who will make that change? In the investment area, we haven't hit that point yet on what will actually change the consumers. NITHIN perhaps has. In the term insurance and the health insurance area, we have hit that nerve where we know what is changing the market, right? And clearly we are making a big impact in that area. But, on the investment side, it kind of totally baffles me why customers continue to buy in higher numbers products which are not so good for them. But it baffles me and they continue to do so. So somewhere I think customer involvement, they use the word, revolution, customer engagement. And somewhere, I believe in what Nitin said. It is the young who will have to do it. Because I don't see my dad ever getting to that stage or my mom ever getting to that stage where they will actually do a revolution. They won't. I don't even see my generation doing it anymore. I actually see the millennials who will have to do it.
Sure. So GAURAV, in the same vein, how is, pricing of lending products getting redefined? I mean, is there a way in which, I mean, you also have a co-lending book, which is very small, and when even put together for the industry, it might be very small for traditional banks to really take cognizance of or take a pricing decision based on how these products are getting sold. But do you see that getting changed, altered in the next 2 years because of greater transparency through digital platforms?
Yeah, I think, we've already started the journey a year or two ago, and not just us, but a lot of the fintech lenders of risk-based pricing, right? So obviously you have buckets of pricing, but if you can actually provide a different price at an individual customer or an individual borrower level, I think that's really the holy grail of kind of pricing around for risk, especially when it comes to lending, right? I think that's already started, and I would say about 15-20% of our loans actually go to customers where there's individual pricing, depending on his or her kind of data, how long they've been on the bureau, or if they're not on the bureau, depending on the income, etc. Right? I think that is the real power when it comes to kind of fintech and digital lending. And when it comes to co-lending and getting banks to kind of agree to this, I think the route that a lot of the digital lenders have taken has obviously been to kind of start with a first loss default guarantee model. And so under that infrastructure, the bank tends to kind of rely on your underwriting models. They tend to rely and trust you to be able to source the customer correctly, price the customer correctly. But I think we'll evolve in the next year or two into a zone where you will see that the banks will actually start to gradually move away from a first loss guarantee, because they are learning as much about the customer through fintechs and start to really adopt this whole risk-based pricing model. I think that is something once a lot of lenders get to, I think that's when we can really say that lending is really starting to make an impact at the whole missing middle level. And I think we are still a few years away from that.
So with respect to your business model, I mean, when you started in 2013 versus now, what have been some of your insights in terms of creating a digital lending platform? In terms of what you might have thought, thinking that I should have an independent book, or I should have this much proportion as a co-lending book, all those equations, and looking at the market dynamics, how has it got altered, and where do you really now see it going?
I think the biggest lesson that we should have maybe learned earlier on is this: there's nothing digital about collections, especially in a country like India, right? So you can have a lot of the digital impact in the play when it comes to acquisition, when it comes to using data for underwriting. And yes, you can build interesting tools like we have on the collection side. At the end of the day, I don't know any lender who's going to be successful or has been successful without having some kind of boots on the ground or telecallers to be able to do collections, right? And like I said, I wish this was a learning we learned 3-4 years ago, but as you go through this journey,
It took a pandemic for this lesson to get.
I would say maybe a year or so before the pandemic. I think those learnings helped us to kind of navigate the pandemic fairly well. But this is just.
How do you address that?
I think the way you address it is by using tech to make your boots on the ground far more efficient. And that's where tech comes. And tech doesn't come in kind of replacing the people. If today I can tell a person, for example, Mr. X has a better probability of paying back, visit him rather than visiting Mr. Y, who probably will not pay back, right? I can make that one visit, which costs about 300-400 rupees, far more efficient to my company, right? And I think that's where a lot of the data and the tech is coming to play, and not in eliminating the number of people that are actually required. I think the second thing is really around really scaling the liability side, and you I think the asset side in India for lenders is very easy. There's no shortage of demand of loans. Whether it's an existing customer of an HDFC bank, he or she will still require a lot of loans, and they will come to a capital floor for a loan. I think where a lot of NBFCs kind of hit a certain mark once they reach the 1,000, 2,000 crore loan book size is really around how do you become unique on the liability side, right? Because you start to hit certain caps and thresholds, and that's where I think having a partner banks to do co-lending with you, that becomes interesting, right? Because as a fintech, you bring your power and agility in terms of acquisition and underwriting, but you can always leverage off the massive balance sheet and lower cost of capital that a bank has. And that's why I think it's always a collaborative model with a bank rather than a disruptive one. And I don't think fintech lenders are really trying to disrupt banks. I think jointly there is a much more powerful model that can be built. Yes, it takes a longer time, but once kind of successfully cracked, we are actually starting to see the power of this co-lending actually play out.
Sure. Yashish, when you started Paisa Bazaar, did you ever even consider having your own loan book and not only taking the marketplace model?
Not just then, even now, we do consider it. There are gaps in the market, especially in the subprime area. See, lending is, it all depends on who can ask the next question, who can get the next level of detail. Let me give you a very simple example, right? I live in the UK. I have to get a mortgage in the UK, but I don't have a salary in the UK. So no bank in the UK will ever give me a mortgage, despite the fact that I might have money for that mortgage sitting in my bank account in India.
Right.
Right. But there will be one bank who will come and say, okay, I will ask you this one question. Do you have money sitting in your bank account in India? How much can you send to us every year? And okay, I'll give you the loan. Now that one bank gets my business, and they make maybe, $10,000-$15,000 or pounds a year out of that business, right? Everybody else lost that business, and I'm a perfectly genuine customer. Now this bank also has an operation in India, so they can see who Yashish DAHIYA is and can operate with that. That's my point. My point is, it was the same thing 15 years ago when I was doing car insurance. Everybody would ask me, okay, how many years have you had a driving license for? I said 1 year, because I just moved to India, to the UK. So risky customer, hence 2,000 pounds. One company asked me, okay, where do you have a driving license for any other country? I said, yeah, India. And they also asked, which country? What's your driving license number? They took that detail. They gave me a price of 300 pounds. I have never claimed in my life. Right? So they, for the last 20 years, have made about 10,000 pounds off me. The point I'm trying to make is, whoever can ask that extra question or get that. See, one of the reasons I believe why Bajaj Finserv is doing so very well is they are selling to customers at a happy moment. They're usually selling to customers not when they're in hospital, but when they are buying a television, or when do you buy a television? When you're largely okay. Otherwise, why would you go and buy a television, right? If you're in financial distress, you're not going to go and buy a television, right? So I think an asset purchase is a beautiful time and I think they crack that whole model beautifully. So I think it's about that level of intricacy. Whoever gets that intricate will, and we see those gaps in lending. And hence I have asked Naveen, who is our CEO of Paisa Bazaar, to partner with some NBFC.
Right.
Or build an NBFC. What's the big deal? We have capital. We are happy to put in capital. We're happy to build that capability as long as we can check at that point. I have asked our team, we're doing life insurance. I have asked our team to do extra diligence.
There again, if you have your own book, the same problem of recovery, you have to build all these on-ground capabilities.
It depends on whom you sell to. And if you can be very careful on that, I'll give you an example, right? We are doing life insurance. The insurance company, they're not asking us, but we are doing for some of our sales, we are doing a video inspection of the customer. We want to talk to the customer with a newspaper, see he's there, and assess how he looks. Is he looking sick? Is he looking pale? We're doing that kind of stuff. Now, why are we doing it? Because if you are able to see in insurance or lending, if you are able to cull out fraud, if you are able to cull out fraudulent statements, if you are able to make some, I'll give you another example. My grandfather, who was in the army, has been lending forever. Now he expired recently. After his death, people came back and returned the money. Many people in villages, you will find, do not default. Just do not default. Because they know if they default, they will not get the loan the next time. So I have never got money back from even close friends or relatives who live in the city. I'm telling you honestly. Even close friends have borrowed from me, my relatives have borrowed, but they've never returned.
The logic you give appeals to me, but how do you explain all these years of priority sector lending going bad? The big numbers show.
I don't know what happens there. I don't know what happens there. All I'm saying is if you have the heart in the right place and ask the right questions, you will get the right answers. And data is the way. It cannot be the same for everyone. And genuinely, many a times I find, what is the problem? The problem is when my salespeople actually start doing it, maybe they don't actually take the video recording. Right? The problem happens when the processes start to break down somewhere. So my view is, yes, there are opportunities and no one player can cover all the opportunities because these opportunities are very micro.
Right.
So there is a space for lots of players. But yes, I am very, very clear, not in the insurance area because there it's much simpler. But in the lending space, we do want to build out an NBFC, but only catering to those areas which are under catered right now. Because today we are struggling with demand with supply on the subprime area, even for customers whom we think are genuinely, good.
Sure. Nithin, so what is the next frontier for you?
Yeah.
For YASHISH, it is NBFC.
Right. I mean, you kind of hinted at this, right? As in, it's not just about expanding the market. It's not about getting transactions. It's also helping people trade better. We're building this platform called Nudge, right? See, the thing, it's called Nudge.
Yeah.
Right. So the thing is to invest or trade better, right? There are 4 or 5 very basic fundamental rules you need to follow, right? One is diversify. Right? Don't put all your eggs in one basket. Don't go against the trend, right? So which is, if a stock is falling, don't buy. And if you're going against a trend, do it with as little capital as possible, right? If you're making a loss, get out fast, right? Don't average down. I mean, so these are all like these basic rules that improves the odds of winning significantly when investing in the markets, right? And a lot of these rules people don't follow because they don't know firstly about it, right? So what we have realized is that
they all know about it, but most of us are indisciplined. It's just like weight loss. We all know exactly what to do, but we just don't follow the rules.
No, I don't think so. Like, for example, averaging down, right, a stock. I'll tell you, 2 years back when all this Yes Bank episode happened, right? Yes Bank was the most held stock we had, right? So, I mean, there is a thing called as disposition bias, right? Where if you have a stock where you're making a profit and you have a stock which is making a loss,
cut your profits and let your losses run.
Yeah, I mean, you actually add to your losses, right? You're trying to make your, bad money, good money, right? So, no, I mean, the thing is, during the act, people forget. So what we've done now is essentially we've built a layer on top of our trading platform, which nudges people away from doing those mistakes, right? Last year, when this whole rush of first-time investors was happening, last April, May, what we saw was a lot of first-time investors were doing a lot of, were entering into penny stocks. So the first nudge we introduced was actually a penny stock nudge. So if you try to buy a penny stock, on Zerodha today, we kind of scare the shit out of you, saying, you know what, you can lose all the money you can invest in this, right? And the guy has to kind of then override that nudge, enter a TOTP to be able to transact, right? And our penny stock volumes as compared to overall equity volumes is down 70% from then, right? And yeah, so I mean, it's super exciting to know that we've been able to make that behavioral change amongst our customers, right? So similarly, now we are working on building different types of nudges. Like when Lakshmi Vilas Bank was going to zero, we actually maybe saved, I don't know how many people from buying that stock, right? So
is that a service or it's just what is nudge?
It's just a, yeah, I mean,
it's a feature.
It's a feature. I mean, it's almost like Siri on Apple, but
okay.
but almost like almost like this, like I said, right? India needs advisors, right? So we are saying, can this advisor be sitting on the on top of the trading platform, which can't advise which stock to buy, because which stock to buy is, I mean, I think that's like chasing the holy grail. I don't think there's anyone who can tell you which stock to buy, right? But if you're buying, if you're trading in the markets, I think risk management is a lot more important than actually the entry and exit strategies, right? As in, we're, I mean, that's something that's super exciting that we're working on, which is, and I think, we'll probably be one of the only few brokers in this country to be able to do this, because every nudge of ours actually reduces our trading volumes, right? Because there is no nudge which will ask a customer to trade more or buy more, right? Every single nudge actually reduces. So, when I said we nudge people away from penny stocks, that meant that we have probably lost a lot of revenue that would have come from those trades, right? And not having investor pressure, not having growth pressure, revenue pressure, etc., right, kind of gives us the freedom to be able to do this. And if we launch it, we make it successful, I'm sure, a bunch of our competitors will have to follow it as well.
Sure. GAURAV, what is your next milestone?
I think in lending, it's not a very frequent relationship that you have with the customer, right? Somebody takes a loan for 2 or 3 years and they pay you back every month. I think the real winners will be in terms of how you can kind of keep your customer engaged in the lending business, right? And so one of the products that we launched about a year and a half ago, like I said, is really a buy now, pay later, that where people are taking about 12 to 18 loans a year from us to buy goods or small assets and things like that, right? And so that becomes very high frequency touch point for the customer, and you're always top of mind, and that helps you kind of not only improve your recovery rates, collections, etc., but more importantly, as you think about non-lending products, whether it's insurance or whether it's savings accounts or wealth, etc., how do you really become that one-stop shop for the customer? And these are not products we will manufacture. We will probably partner with other people. But if you've got the customer and he's with you for 2-3 years, how do you kind of keep making sure he's actually taking something from you every few months? And I think that's really what winners will kind of do in the lending business is how do you get your customer who's typically dormant on most months, how do you get him to be a frequent kind of user of your services?
Thank you. Thank you so much. I really enjoyed.
Thank you very much.
Thank you.
All right.
Thanks.